And we're back. Building what matters. Today's guest, Jason Riffe. He's a big name in affordable housing, in the affordable housing market, the development side, financing, loans. Glad to have you on.
Great to be here. Thanks for having me.
So, tell us what you do and how'd you get started in how'd you actually get started in this business?
Yeah, no, that's a good question. Okay, what do I do? Well, I own a financial firm, and I advise and structure on financing for affordable housing nationwide. And so, what that means is I use capital markets as opposed to direct bank lending to provide debt financing for construction, acquisition, and renovations of buildings. Typical deal size is around 75 million or more. I don't do a deal below 35 million, but my largest deal is about 315 million right now. How did I get started? I would say I got started in a fairly non-traditional way. I didn't study business in school. I studied theology, the study of religion, and social ethics. I started my work working in sustainable development internationally, and I realized when I was supervising the construction of housing in Haiti that the real impact was on the money side. I was able to project manage 2 million homes being built across the country. We built a home in 7 days because it was concrete block, tin roof, rebarb, one room. But at the same time, I saw financing coming to the country to pay for this stuff. No one was getting paid back, and the rates on this capital was 0 to 2%. And something in my head clicked and said, if I want to help people, if I want to help humanity and help house the most vulnerable people for the purpose of ending poverty, I need to figure out how to finance this thing.
Mm. So then what happened?
So then I left Haiti and was assigned to the Virgin Islands after their hurricanes. That was an experience. I was sent 2 days after the hurricanes to do a situation report. We call it a sit rep. I was giving a sat phone, no housing, an unlimited budget, and it was told to figure it out when I landed. So I was there for about 7 days, and then I burnt out. I was like, I'm tired of disaster relief. I acquired an enormous amount of skills and understanding of both the need and how to solve the problem. And I said to myself, where are the third world conditions in America? Well, LA looks like it needs help. Let me go to LA and work on homelessness. Yeah.
Yeah, definitely. We're one step away from being a third world country, downtown LA. You look at Skid Row.
Would say that the conditions in LA in 2016 mirror the conditions of the people I saw in some of the toughest parts of the world.
Yeah, exactly. So that brings us to affordable housing. Obviously, over the last, I'd say, 3 years, it's picked up as a big trend. FB Corp, we're one of the names as general contractors, one of the premier GCs in affordable housing. We're just completing a 53 unit. We got a lot more on the way. There's some other various developers, various names. I think the affordable housing section is definitely a closed circle of developers and builders. But tell me your experience right now with affordable housing.
Yeah, I mean, FB Corp is a name that's been heard around LA for a little while now, and it's definitely doing great work as a firm on both new construction, renovations, and everything in between. What I saw when I moved here and kind of chose LA as the place to grow my career and really see how I could help the community, I saw that the cost to build affordable housing was significantly higher when you used public dollars. And in addition to that, the time it took to both acquire your capital and put a deal together averages around 6 to 8 years. So imagine your typical affordable housing builder, again, 9 years ago and prior to that, might want to build 60 to 80 units It would take them 8 years just to get their capital together. They would need 12 different sources, and those sources were all public, which translated to a cost to build of around 650,000 in LA. The numbers in San Francisco were about 800,000 to a million, and that's per unit using public dollars. And so the thing I quickly realized was if I want to do this at scale and really have an impact, I need to work with and figure out how to build quicker and cheaper. And so the solution that I came up with is something we're seeing happen at scale across the country. There's some great developers who FB Corp knows and has worked with, in addition to others who have figured out how to build with private dollars, but still solve the same problem that we're seeing in society. So the question of can private markets and institutional capital do well and do good at the same time is answered in the affordable housing sector. Yes, you can. You can both make a return. You can make market returns on your equity. You can have de-risked debt, and you can help house people and end the affordable housing crisis across the country.
So when you're structuring these deals, is it and dealing with private money, are you structuring bonds? How does that work?
Yeah, so I would say traditionally these builders are used to 60% leverage from a bank loan or market debt. They get the remaining 40% through equity or LP investments, and then they go build their building. And in that structure, rarely does the sponsor actually own the building or participate in the upside. The LPs capture all of the profit from the deal and from the operations of the building. What I realized was that if I could get higher leverage, then the sponsors need less equity, which also means the sponsor themselves make more money. So everyone benefits, right? There's less equity needed, so the equity investor takes less risk. The sponsor generates more income for themselves and their company in addition to building or renovating the deal. And your debt investor has a de-risked investment where they can invest their debt. And so using bonds, corporate notes, and capital markets, you're able to raise private debt and private credit directly from debt investors. And most of those investors are typically muni funds, mutual funds, ETFs, who are looking to invest at scale, which is why our deals have to be a minimum of 35, typically, hopefully 50 million at a minimum, so that the investors can write a large enough check that it impacts their fund.
Exactly. And I believe that, LA alone has a plan in place, a 5-year plan by 2030. We're supposed to be building an additional 30,000 plus units.
I think it's even a bit more than that. I think by 2029, LA is supposed to have over 450,000 new units permitted.
Wow.
Just in LA. The whole state has these numbers assigned for different counties across the state, and we're nowhere near that number.
Mm-hmm.
And so one way that I'm thinking through, again, how can I help the community? How can I help individuals? How can we support the development of affordable housing? If you can access private capital and, again, build quicker and build cheaper, then more people can participate.
From a construction standpoint, to any investors, developers that have some, cash on the sidelines, if they want to invest, I can tell you, obviously, reach out to Jason, but also about 90% of affordable housing projects are slab on grade, no parking, 3 to 4 stories high, type 5 construction, basic hydraulic elevator. So the cost is there, and you're usually talking about a 14 to 16 month build out from the ground up.
That's right. And we're also seeing a lot of movement from individual investors who want to participate in this market and participate in these deals. So you're able to basically buy a fractional share of your bond through a Fidelity or a Morgan Stanley or one of these brokers. And so your neighborhood individual can then both wealth build and invest in the building in their neighborhood to to the extent they're a qualified investor and meet all the compliance issues. But on the construction side, I think where FB Corp can really participate and benefit is what we're seeing in Altadena and Pasadena and some of these areas where we need both new construction for multifamily and single family, but also where we need to expand into smaller markets like Coachella, Fresno, San Bernardino, and develop good workforce and affordable housing in those areas.
Yeah, I could say that if we were to head north, not only would be more competitive. I mean, we've competed. I've already competed with a GC back in the day, out of Santa Barbara, and they got fired. They were terminated off of a project in Bel Air, and we came in and blew them out of the water. The owners, we were originally hired to do 8 renovations, and I want to say our second day on the job, the owner called me and said, "I want you to take over the whole building. I'm firing the general contractor." We came in, not only were our prices better, but we had about 40 to 60 guys on the job site every single day.
That's amazing.
So we were able to blow that project out of the water. And
what are you seeing with tariffs, both tariffs and employment issues these days?
I think that definitely labor. I think that some of the okay, in regards to affordable housing, you're dealing with a lot of rookie developers. They come in at a really low cost to try to hit, save as much money as possible.
Win the business.
The problem is that when you go with that a project that low level, you're talking about subcontractors and workers that are basically Home Depot level. So when you're dealing with Home Depot level laborers and workers, now we're talking about subcontractors that basically don't care. They're not tied to any contract. They're not tied to showing up. They're going to want to get paid every single day or every day or every week, or they're going to threaten the project. There's been videos circulating online of like people breaking concrete, asphalt, breaking concrete slabs, some of that third world country, Mexico style construction. So for us, I want to use more, obviously, higher quality subcontractors, almost to a point to where they're highly skilled, carpentry level, union level subs, meaning that, for example, once you get into the MEP phase and you're doing production drywall, whether it's, look, there's been times where I might get billed for 5 drywallers, but those guys aren't, there's either one, they're sitting on their ass, or 2, you have subcontractors that are blowing out 40 sheets a day per guy, 35 sheets a day. Well, owners are really impressed when they show up at 8 o'clock in the morning and prelims getting done, and they come back at 11 and like 2 units are already finished.
And what are you seeing
or
on
4 units finished?
And what are you seeing on your clients and your contracts in terms of time to completion, from when you engage and when you start to when you finish?
I'd say ideally 14 to 16 months is ideal, but that's for seasoned
for what size?
Contractors. Anywhere from 50 to 100 units. I personally think that the higher you go, because economy to scale, the more of a budget you have, and you're going to be able to get those higher level, because there's one of the things that developers don't realize is that there's some cost that are fixed. Whether it's 18 units or 100 units, you're paying the same price.
No, I agree. It's the same on the financing side. That's why if I do a $3 million deal or a $35 million deal, it's literally some of the costs are fixed and the same. And so why not both help the sponsor do a bigger deal, but take on bigger clients myself?
Yes. So a good example is the price of an elevator. So an elevator is going to be about $150,000, whether it's 18 apartments or 60 apartments. It's the same price. So what some developers don't realize is they're looking at price per square foot, right, which is a erroneous number, because they're not really taking into consideration if there's a street light, a fire hydrant, pavers, underground. Is there a sub tank system? Is there a 50-gallon Jensen
A
tank
lot of
under
those
the building?
fixed
So there's a lot of shit that they don't even really know about. And a lot of GCs, some GCs that are trying to appease the owner end up getting into trouble. I remember I lost a job 5 years ago to a GC, and the owner called me back and said that the project got bottlenecked, got leaned because this dumbass contractor forgot to bid a $350,000 tower crane. So he left the tower crane out of the bid. And now you got a project bottlenecked.
That's crazy.
But personally, in my opinion, if I was a developer, at the end of the day, I wouldn't be thinking like that. Because when you're talking about millions of dollars, right? Whether it's 10 million or 11 million, I know that my exit is 30 million dollars. So why the hell am I going to beat up some contractor and waste time fighting over who has a cheaper plumbing bid? Who go with the guy that's more experienced, go with the guy that's going to get the job done faster, that's going to pass inspection the first time, sitting right here. Should I go with a switchgear that's 55,000 or 65,000? Who gives a shit?
Well, and similarly, when we're looking at structuring the financing on the bond side, even our investors like to know and vet both the GC and the rest of the team and say, do they know what they're doing? Do they have the experience? Can they make those decisions?
Yeah.
And do we trust them to give them our money? What other markets are you working in? Are you just in LA?
We're in Florida. We're licensed in Florida. We're licensed in Arizona. One thing I could say is FB Corp between now and 2026, Foundational Builders is making the pivot to become a developer. And when we become a developer, we're going to be a monster.
Tell me the difference from a GC, a general contractor, and a developer.
A GC knows what it takes. We look at all the intricacies, right? We know what's going to pass inspection. We know the corrections. We know. So for example, the fire marshal doesn't care whether your project's affordable housing or not.
Right.
If you have to use fire treated lumber on the exterior walls, if we know that there needs to be a certain walkway path on the roof. So a lot of these developers are not, they're just think, oh, it's affordable housing, it's cheap. So for example, the one thing I like about construction is that, see, unlike other industries where you think, oh, I could cut corners, or oh, I could go on Home Depot, oh, I could find this, is that if you take that route in construction, you're going to get your ass kicked.
Well, and that's also where
you're going to get beat up.
I got excited by this industry from the human rights side, and it's the same thing. You're not allowed to build a different door, what they used to call the poor door in New York. You're not allowed to build a different door for your low-income individuals to enter. You're not allowed to use different materials for the affordable housing building as opposed to the market rate building. As you just said, it's the same materials. And so we're providing dignity to people who are not able to have dignity by society and the community. Yeah. And you're doing the same on the developer side, where we're doing it on the capital side, and it's exciting to see.
No, I agree, 100%.
Yeah. So you're in Florida, you're in Arizona, you're in California. You're doing renovations, ground up. What's next for you?
Probably. We're still going to continue to take on projects. A couple things. Taking on projects for private developers, but we are pivoting, right, to being a developer. And I think that just based on what we know, we're going to be a monster. By the time you got a investor looking at his Excel spreadsheet, should I make the offer or not? We've already fucking bought it.
That's right.
It's already fucking done. We're not playing games. So when FB Corp does become developers, we're fucking taking all the projects, every single one. By the time you think about, oh, should I invest in it? It's already fucking sold. We're not fucking around. I've seen too many shitty developers already that don't know what the fuck they're doing. They're on the verge of going out of business. They're hiring all these trunk slamming Home Depot level fucking subs jobs getting lean, drywall's getting ripped out. They don't even know how to put their switchgear together, fucking ripping out drywall, got home runs in the corridor, don't know shit about construction. We're fucking putting all those wannabe developers out of business next year. Not fucking around.
When you need your leverage, we'll help you get your financing.
Yeah.
We'll find some debt investors for your projects.
So that's what we have going on, especially with some of the capital that we have, capital raising that we have that's coming on board, and we're going to continue to kick ass. And if a developer wants to come in and be a part of what we're doing, great. But we're going to get to a point where we don't fucking need them.
No, I love it, man. You have a great team. I mean, you have a staff of about 10 to 12 people and a number of subs. You're doing great work.
Yeah. So that's what we have going on. Tell us about what projects you got going right now. What are some of your bigger and notable jobs, and what do you have going on?
Interesting. So as of in 2 weeks, I have a deal closing that'll be about somewhere between 30 to 40 million. That'll be in LA for a stabilized asset that needed a refinancing. In another 2 weeks, I'll have about 300 million closing on a new construction deal. And again, like our preferred client and preferred project is a stabilized portfolio of assets that is trying to figure out how to recapitalize a project that was financed with lower rates and in an environment where there's less equity for this. So going into next year, I would say I have a couple $100 million in the Pacific Northwest, another couple hundred in LA County, and New York State, probably about 150 million that I will get done in the first quarter. From there, we're trying to get to 600 million conservatively a year, ideally 900 next year, and then $1 billion in 2027 of debt that we have structured.
Very nice.
It is nice. It's nice on a dollar value, but it also translates to units.
So you do affordable housing up north, like in San Francisco.
I structure this for anywhere in the country. Yeah, we can provide debt investors for these projects, forward and workforce housing in all 50 states.
Very solid.
Yeah.
Nice.
Yeah.
Nice.
Yeah, I think once we hit $1 billion, that'll be a game changer. Last year I crossed 220 million, which financed 1,800 units in LA. This year should be again probably about 350, almost 400. So 2 more years, I think we'll hit the number.
Very solid.
Yeah.
So, Jason, anybody that has any money on the sidelines, they want to get involved in affordable housing, they want to get they want to invest. What's your advice to them?
Yeah, that's an interesting question. I mean, I'll also take the approach of both investors, but also people learning coming out of college. I might answer in 2 different ways. On the investor side, I can't give advice on what accredited investors do with their funds. So talk to your investment advisor, and they will tell you how to get into the product that we structure. Our product is generally traded as a municipal bond, and so anyone who's interested in municipal bonds should talk to their investment advisor and make that move. It is from my personal opinion, it is a very safe asset class. Municipal bonds cover everything from affordable housing to water plants, to road creation, to everything that cities issue bonds for as well. But I do like the debt space. I think it's fairly safe. For someone who's coming out of college that wants to get into this, or someone starting their career or want to transition into affordable housing, I would say there is no direct path. Again, I did not start out in this sector. I kind of backed into it out of a passion and a calling more than a desire for income or success. And so I'd say first and foremost, see if you're actually passionate about it. I worked more years of my working life making less than $20,000 a year than I have worked making more than entry level six figures. And so it was definitely a passion to acquire the skills and the resources and the knowledge to be effective in this space. But if as a direct advisement, I'd say leverage your expertise, your knowledge, whatever you have at your age and in your position that you can leverage. Focused knowledge is better than generalized knowledge. And if you're coming out of college, maybe don't go for the biggest brand, biggest name for a job, but go somewhere small that needs you, like a Haiti where no one else wants to go, or a smaller firm with, 4 to 8 staff, and provide your expertise and knowledge so you can learn while you work. I think that'd be the best advice I can give. And in your learning, over the course of your time, you'll figure out if you want to be on the construction side, the finance side, maybe the services side, and you end up at a nonprofit.
Good to know. So yeah, we definitely look forward to working with you in the next couple of years on some projects. Well, I want my own fund.
Let's do it. What? How much do you want to raise?
Fucking $500 million.
Okay.
Let's do it.
Let's get it done.
So, yeah. So my advice to anybody that's in college, fucking studying sociology, theology, gender studies, is get up out of your class, tell your professor, fuck you, this is a waste of my time, and enroll in something that's actually going to benefit you, like business.
There's a version of that I would support. I do think electricians are going to make the most money they've ever made. Data centers immediately need electricians to run wire, and there aren't enough already. Air condition, that's always been a great business over the past decade. Those guys come out of high school making $160K.
Yeah.
Like they're, again, like in a great place to kind of get that experience would be with FB Corp. And, do you guys support any sort of apprenticeship programs?
Thought about that. Yeah. That might be coming out. That should be part of our 2026 game plan.
Work with unions.
Is maybe some type of school. Some type of trade school course.
Yeah, people can learn on
certified.
The job.
Something we could brainstorm for sure. Similar to real estate agents or real estate brokers that have an online school. They charge $150, $300 a student. They get certified to take the test. Same thing.
That's right.
Certified to become a plumber, electrician.
Or could partner with some of the ones that already exist and say, I have jobs, I'll hire your people.
Yeah. Sounds good.
This is great.
Great. It's good having you. Let's definitely
great having you.
Make this happen. So, all right, guys. So thanks for tuning in to Building What Matters, and we'll see you next week.